Well, President Trump, as he resumes his criticism of Fed Chair Jay Powell after the Fed kept interest rates unchanged, Trump continuing to call for the Fed to lower rates. However, the central bank awaiting greater clarity before making a change in policy. Fed Chair Powell emphasizing the uncertainty on how Trump's tariffs would affect the economy.
A sharp decline in sentiment and elevated uncertainty, despite heightened uncertainty, highly uncertain, a great deal of uncertainty. There's so much uncertainty. The thing is, we don't know that. There's so much uncertainty. My gut tells me that uncertainty about the path of the economy is extremely elevated. To say it again, the timing, the scope, the scale, and the persistence of those effects are very, very uncertain.
For more on the Fed's next move, let's bring in Robert Kaplan, Vice Chairman of Goldman Sachs and former Federal Reserve Bank of Dallas President. Rob, it's great to see you as always.
Great to see you.
We're going to get to the president's stuff, but first I want to start with that air of uncertainty, which of course Jay Powell is not unique in talking about. Every company on their conference calls this time have talked about that uncertainty. How does the Fed navigate during periods of uncertainty? There have been certainly periods before where the data has not been clear and the Fed has had to chart its course anyway. How do you think the folks there are thinking about that right now?
So there's a couple of types of uncertainty. There are periods that are of cyclical uncertainty where you wonder if the economy is softening just cyclically. Then there are times where there are fundamental structural changes. That's what's going on right now. And what I mean by structural changes, we're changing the way we do government spending. There's a new tax bill coming in the next few months in addition. We are redoing regulatory oversight across industries. There's an effort to dramatically curtail immigration, certainly illegal immigration. We haven't ramped up legal immigration, and we're deporting some number of immigrants, and there's uncertainty among millions of undocumented immigrants. Then you get to tariffs, and the issue on tariffs is we don't know what the levels are going to be. We've got extraordinary tariffs on right now with China. We have a bunch of negotiations going on. We just don't know how they're going to get resolved. So if that sounds like a lot, that's a lot. And so it's very hard to make an economic forecast when you've got this many structural changes going on. And the Fed is trying to be patient and let these things unfold. The thing that could force their hand is if you saw the economy slowing so significantly that the unemployment rate began to either move up or spike up. But we haven't seen that yet. And I think while there are weakness in the economy in certain sectors, we haven't seen such significant weakness that unemployment is spiking up. And if that's the case, then the Fed's is going to keep taking it one meeting at a time and trying to understand what's going on with both employment and inflation.
Rob, when would you expect that weakness to show up? Because the soft data has taken a hit, but the hard data is hanging in there. I mean, you heard, Jay Powell talked about that yesterday, Rob. You know, he said, and bottom line, he said economy resilient, labor market resilient, underlying inflation good. So when would you expect that to show up in the hard data?
So there's two things going on. One, the tariffs that we were shocked by on Liberation Day, they haven't actually gone into effect yet. And so we've seen a lot of pre-ordering and anticipation of them. We've seen businesses trying to figure out how they're going to manage them, big and small businesses. In the one country you see extraordinary high tariffs on is China, and that is having some impact we see right now on businesses. So we're seeing slowing. The thing that also is going on, though, the labor force is very tight, unusually tight. And the reason is we've reduced immigration flows, and organic indigenous flows are very low. So you may actually see, we saw a significant first quarter weakness, and we didn't see the unemployment rate spike up. Why is that? I think part of it is businesses are reluctant to get rid of workers as long as they're going to stay in business, because they know it's going to be difficult to replace them. So I'd be watching every employment report. I'd be talking aggressively and to contacts about what they're seeing, but we haven't seen the weakness yet, I can tell you that. In a couple of three sectors, travel, leisure, tourism, obviously, shipping, But apart from that, business is hanging in there pretty well. And I don't think you're going to see the unemployment rate spike up either. I'm not seeing that either at this point.
So, Rob, you watch the data, you watch jobs data in particular. You don't listen to what's coming out of the White House, presumably, if you're a member of the Fed. That said, with the president's rhetoric persisting in terms of him now saying the Fed really needs to cut rates, do you think that at some point Jay Powell is going to need to come out and make a more forceful case of why cutting is not appropriate right now?
Yeah, I think as this unfolds, particularly if you see more significant GDP weakness, which leads to unemployment spiking up, then yes, he will have to explain more why the ramp up in unemployment isn't enough to justify adjusting rates. The other thing that should be going on here behind the scenes is normally the chairman of the Fed will be talking regularly to the Treasury Secretary. I'm assuming those conversations are going on. They normally would be, and I think it's very important that that line of communication is also open. Very
interesting, especially since Powell was asked if he has talked to the president, not if he has talked to Scott Bessent. So we'll keep that question in our pockets for next time. Robert Kaplan, thank you so much. Great to see you.
Good to talk to you.